So a year and a half ago, we were worried about the viability, about the breakup of certain big miners, and I think of Glencore in particular. You kind of fast forward 14 months, and they're all issuing out dividends.
Yeah, which is hugely important. If you think about just the UK stock market, how many companies are still paying dividends? And these commodity companies represent a huge chunk of investors' returns on these equities. So it's not just important for that, but I think it's also an important signal to the market that they've listened to the market. They're not going to go out and do big M&A. They're going to return money to shareholders. The debt is coming down, being paid off. So they still seem to be doing the right things. The question is, will they have the discipline to keep going on that sort of trajectory?
But your underlying, I guess, fundamentals is what? Because there's a pickup in demand coming from emerging markets, including China, or because they closed down the mine, so they have a better handle on the oversupply?
They got lucky on something. So, for instance, we were talking during the break about the copper market. Yeah. You've got the number 1 and the number 2 copper mines in the world are hit at the moment. One with the strike, and one because of a tussle over export permits. So those kind of events change sentiment dramatically. And you've seen that in copper, and to some extent the rest of the base metals market is following on those heels. But it must be said that we haven't seen a huge jump in Chinese growth, but we have seen a huge jump in Chinese stockpiles. Yeah. Those two things don't sit well together.
Stuart, help me here with a money question, and I go back to Ruchir Sharma and many others talking about, quote unquote, a commodity super cycle. Bring up the chart, Anthony, right now. We can do this on the Bloomberg. You can take this chart. You can steal this chart from me on TV Go. Iron ore back 20 years, and I get the downtrend and the debacle, and this is back to 2008, excuse me, not back 20 years, back to 2008. There's the Chinese downturn and the recovery. Is the Stuart Wallace super cycle in place? Are you willing to say all clear for commodities?
No, I'm not. And again, we managed to pack in a lot into the break. This is the other thing we talked about. How sustainable is this? Not in terms of are we going back to very low prices that we saw a couple of years ago, but more does this rally continue? And I think what we've seen in the oil market is probably a pretty good indicator. We've been trading sideways for about 2 or 3 months, waiting for more news about supply, a little bit more news about demand as well, although that's held up pretty well. So the super cycle, I wouldn't put my bets on it, and the reason is this: I don't think there's another China out there. I don't think India is able to step into that sort of position. Right. So in the absence of that sudden surge in demand on a dramatic scale, I don't see how we get back up to the prices that we had in, say, 2011, 2012.
Stuart, Manus Cranny is going to interview the head of OPEC here, and they're dealing with the technology of petroleum, and particularly technology in the United States. Is the same technological revolution going on in Australia like metals? I mean, is it the same as petroleum?
No, it absolutely is. Now, it's probably not quite as dramatic as what we saw in the shale revolution. There hasn't been a single piece of technology or a technological process that has enabled lots of new reserves to come out of the ground. But there is no doubt that they are getting hugely efficient. Go and visit a steel plant today in most of the Western world, and there's maybe 20, 30 people operating this enormous plant. Go back 100 years, and it would be thousands and thousands of people needed for the same thing. So that is quite dramatic. Same in coal mining. Again, the introduction of longwall technology has allowed them to produce huge amounts of coal in a way that they couldn't have 50 years ago. And that will continue. There is a pressure on costs. They have to keep them down, and as you see wages rising as commodity prices come back up, there is going to be an intense pressure there to come up with technological processes that can contain the costs.